a relatively good year for Indian stock markets, especially when you compare it with what happened to global markets this year.
Yeah, sure.
Anyway, the Nifty 50 is up almost 5%, while the S&P 500 is down over 18% year to date. So you can see it for yourself.
Well, a 5% up move isn't great either.
But Sandeep, why do you have to be so pessimistic about 2022? India has been one of the best performers this year. A lot of stocks from the heavyweight index have performed pretty well, if you ask me.
But you can't ignore the global headwinds, including an aggressive pace of rate hikes and geopolitical conflicts. These factors have severely impacted the performance of several marquee names. And as we prepare to enter the new year, let's take a look back at the stocks that were the victim of global and local headwinds.
And also the stocks that have been able to overcome these challenges. Because why not? If we're looking at the laggards, we should also look at the top performers. But first, don't forget to like, share and subscribe to the Moneycontrol channel. Alright, so let's begin with the top performers. The first name on the list is Adani Enterprises. This is one stock that has stayed resilient despite all that has transpired in 2022. The Russia-Ukraine conflict, inflationary pressures, supply chain woes, recessionary fears and subsequent wild moves in the market. And let's not forget, a key factor that's made Gautam Adani the third richest man on the earth today are his holdings in Adani equities. Adani Enterprises has recorded a 117% YOY rise in its profit for the latest September quarter results and a 3x jump in its revenue. The growth is due to strong performance of its integrated resources management and airports business segments. Furthermore, Adani Enterprises aims to spend 55,000 crores over the next few years on new energy, airport and road sectors. In fact, green energy opportunities and any announcement towards the same can lead to further re-rating of the stock beyond its estimates. Talking about single-handed gains this year, you cannot leave out ITC. Yes, the meme stock for the past many years, a slow and sluggish mover, finally got out of its slumber, and how? So what really worked the magic for ITC this year? The benefit from growth in cigarettes, paper and hotel businesses. Besides, ITC's increased focus on FMCG helped improve the growth trajectory of the business very significantly. Experts remain positive on ITC even for 2023 as the government has kept tax stable and cracked down on illegal imports, which would aid the cigarette business. If serious changes are implemented across different businesses in the near future and the elusive demerger of various subsidiaries is done, market watchers believe ITC could go up to 1,000 rupees in the next 4 to 5 years. For Coal India, the climb to top 3 hasn't been an easy one. But as we are set to conclude 2022, it sure is the best performing PSU stock from the heavyweight index. Going forward, analysts expect Coal India to benefit from higher e-auction prices and volumes in the second half of FY23. It is expected to achieve volumes of 700 million tons in FY23. Remember, the company declared 15 rupees a share first interim dividend. High profitability will ensure cash after capex for a higher dividend as well. You cannot talk about the big winners of 2022 without mentioning auto names. And M&M is a clear outlier there with a fantastic 51% up move. This was possible because of strong fundamentals, a boost in capex, drop in raw material prices and a significant rise in sales that have made it a standout performer. It's got so much going for itself. The XUV 700 is seeing strong bookings of more than 8 to 9,000 units per month. The demand for Scorpio Classic is greater than the planned capacity. Farm equipment business has been quite resilient and new launches in the high-end segment and in EVs as well as export revival also represent potential re-rating triggers for the stock. The stock of Axis Bank has gained nearly 40% in 2022 and brokerages continue to be bullish on the country's third largest private bank. Axis has strengthened its franchise over the past few years to deliver sustained improved performance over the medium term. Now, experts see Axis Bank emerge as a structurally stronger franchise which will continue to deliver consistent performance. The street also expects the current valuation gap of Axis Bank with its core peer ICICI Bank to narrow down over the next 6 to 12 months. And finally, the bank has started gaining market share on the CASA front, which of course augurs well for the company. Now, Sandeep, over to you. Let's talk about the key losers then of the year.
On to the laggards now. 4 of the 5 biggest large-cap laggards this year are IT sector stocks. So what's plaguing the tech industry? Global macro indicators have been flashing red for some time now. Yield curves have inverted in the US and the UK. Inflation remains elevated and CEOs' confidence have plummeted. Amid macro uncertainties, clients are turning cautious, leading to a slower pace of spending, delay in decision making, and pause in smaller deals, which would constrain the near-term growth trajectory. Headcount reduction by global tech companies and near hiring freeze by IT services vendors also point to the anticipated slowdown. The dollar revenue growth estimates for FY24 for the top 5 IT services vendors has come down by 3.5 to 6 percentage point. Some of the froth in evaluation has come off after 15 to 38% PER correction in the top 5 IT names in the past 12 months. Earnings could be supported by margin expansion from Q1 lows and forex tailwinds. However, the demand outlook for the Indian IT services looks weak, and the street expects approximately 450 bips lower revenue growth in FY24 versus FY23. Revenue growth moderation is likely to weigh on the sector's valuation. We have seen the relative resilience of the top 5 IT players through their exposure to stressed verticals. However, experts caution that it's not the time to chase alphas. Finally, one name from the non-IT pack too, Divi's Lab. The first major fall we saw was in May this year after analysts warned that the company's abnormal growth, which was largely driven by the COVID-led drugs, looks unsustainable as the pandemic had eased globally. Over the last few quarters, the annual growth in the profits has been steadily coming down. In fact, for the most recent September quarter, the company reported a near 20% fall in profits. Things aren't looking all that great for the remainder of the year either. Most likely, the company will close the year with only a small growth in profits and perhaps a flat growth. Sitting pretty at 5,000 per share around a year ago, the stock commanded a lofty PE ratio of 60x. This is twice the long-term average of around 30x. So has the correction been overdone? As the stock currently trades around 29x, it's trailing 12 months earning. A lot rides on the profit trajectory going forward. If Divi's manages to grow its profits at a CAGR of 15 to 20% over the next 2 to 3 years, then the current PE of 29x can certainly sustain. Now that's something we need to wait and see.
And we will see what happens to this stock and all of the other names that we flagged off. We've given the outlook for 2023 and beyond. So better to keep these names on your watch list to see how they play out in 2023. With that, it's a wrap. Thank you guys for watching. We wish you all a very, very happy new year from all of us at Moneycontrol.